Ladies and gentlemen, we are back at it. Today we are going to be breaking down the entire trading strategy of supply and demand and give you a very good knowledge base of the trading strategy so you can go off and start trading it yourself. We are going to be talking about the concept of supply and demand, the theory behind it, how to identify and draw zones, how to take a top-down analysis, trade reviews, how to manage a trade, take profits, everything, trend lines, everything we are going to be talking about in the methodology. I'm not going to lie, I got to add some flair to this in my own personality because this is going to be a long video, but if you are here to learn about the trading methodology, you are in the right place. I mean, I've been doing this for over 8 years. Since I started trading, this is the trading strategy that I've been trading with, as well as helping many other traders, and this stuff does work. I am traveling and trading around the world, been doing that for a couple of years. I show you guys other people producing these results. These are traders trading the supply and demand trading strategy, and they do extremely well. So I'm here to break down. I'm also going to be separating what the difference is between a losing trader and the profitable traders on this trading strategy. So this is going to cover a lot, and this trading strategy does produce results. It's really for the traders who are willing to put in the work. But as you can see, this trading methodology does work. And so we are going to cover everything down, whether you are a brand new trader, you're trying to become a prop firm trader, you want to make a first or second stream of income, you are in the right place. I'm not sure if this is going to be time stamped out because I don't really want people jumping around thinking, oh, I just want to have how to draw zones or take profit. There are videos I have already made talking about this, but I am going to break it down all in this video. So this is a video that I'm actually going to replace all my videos with to be the #1 video that I direct people to. So if you did want to learn more individually about certain topics, you can go to my YouTube channel and go to tips playlist. And I have broken down part 1, part 2 before and part 3, but each individual video is how to identify zones, how to draw zones, the price action, take profits, top-down analysis, all this good stuff, trade reviews. That will be in the description below for you to learn more. But trust me, this is the video you want to start with, as it's going to take the #1 spot in that playlist, because we are going to cover everything in the methodology as much as I can without making it a 6-hour video. And now, like I said, I got to add my own flair to this because, my gosh, this is going to be a long one for me to sit here and talk. So you know what? Let's get straight into it, shall we? So let's scroll up to this top of this ebook that I have written out for you guys, and let's basically talk about this. And I'm going to bring you through the ebook as well as the whole trading strategy. If at any point you guys like this video, I really appreciate if you push the like button. If you have any questions or comments about the trading strategy, you can always ask them down in the comments below, or you can reach out to me on social media at Moneyball Austin, Facebook, Twitter, Instagram, TikTok as well. My gosh. So that is all there for you in your resources down below. Crack a beer. I am currently having a Modelo beer here in Mexico at this resort, so it's going to be a nice one. Let's get into this one. I have already, introduced myself and show you guys that this is 100% profitable. But just like any profession, guys, like a lot of hours are required to become a profitable trader, right? So you need to sharpen your skill, take time to learn, put the practice, make observations, go back to the drawing board, research, come back and apply, right? So it's nonstop that. It doesn't stop. After 8 years, it doesn't stop. I mean, we're going into Christmas and I'm going to do my year-end review. And I do this every 3 months, 6 months, and it's fun. It really is fun. All right, but like I said, it definitely is possible. I'm doing it as well as many other traders. And my goal here is to really provide as much value as I can so you guys can become profitable day traders for yourself. Maybe that's a first, maybe that's a second stream of income. Anyways, so let's get started. Yes, we are going to jump into the charts, but you first have to understand this, that supply and demand is just one trading strategy out there. There are hundreds and thousands of trading strategies, whether that's just like Elliott wave theory, looking at level 2 order screens, support and resistance, other technical analysis, fundamental analysis, EAs. There's a bunch out there, and you can deal with information overload. I am not saying this is the best trading strategy. Everybody is going to be different. There are going to be a lot of points in this video that I might only briefly say them, but I make sure I say them, or I go into a concept that might go over your head, but it's extremely important that I address this in this video because it's one of the #1 tips that I can provide, and it's important that I go on these little 1-minute side conversations about certain subjects and tips that I provide you. As I would be editing this video, I'd be like, damn, I wish I added that into that video. Anyways, I have to tell you guys, there are many different trading methodologies out there. Not to say that this is the best one, but I believe, and I've talked to many other people before, and everybody seems to have to believe in a certain methodology out there, right? You got to understand the theory of it and actually like the trading methodology. If it goes against all your beliefs and you don't really understand it, you're not going to do well, right? So if you're playing a professional sports team, if you don't buy into the system that they try to implement for the team, you're not going to be a very good player. You know what I mean? So you got to buy into it, just like if you're buying into a relationship, right? You got to like the person, right? I hope you're not getting into relationships where you don't like the person. So let's carry on. So first things first, you understand that the markets are dominated by the institutions. Like even currencies is like a $5 trillion every 24 hours circulated in the market. So these are not retail traders that are making. We go back to the charts. These are not retail traders that are making these big moves here in the market, right? This is a 4-hour time frame, and this is replicated on every smaller time frame. I know that's a common question people ask. What about swing trading? What about day trading? I'm going to get into that, right? I'm going to make sure I cover everything. Yes, it can be replicated on every different time frame. You just got to change up your different time frame approach, okay? But these trading institutions, the big money, are the ones making these big moves in the market. So what we are trying to do as supply and demand traders is we are trying to identify where the big money is buying and selling at and join them, because we understand 90% of the retail traders are losing money at this game. And the institutions, the big money, are the ones continuing to make money day after day, week after week, year after year, right? So we want to be able to identify where the big money is buying and selling so we can trade with them and hopefully start producing profits just like them. That is the whole theory of supply and demand, is to identify where the big money is buying and selling at and trade with them, right? And I'm going to break down how to do that. So you might be asking, how can we actually identify where the big money is buying and selling? Well, like I just explained to you, 95% of the liquidity is actually coming from the big institutions, and us as retail traders are only a drop in the ocean. So how can we identify where they are buying and selling at? Well, these are the 4 patterns we trade as supply and demand, and I'm going to bring you through the charts how to identify them and trade them throughout this video. So these are the 4 patterns. We have 2 supply patterns and 2 demand patterns. There's no need for 20 different trading patterns like flag patterns engulfing. Yes, these can all be used to increase the quality and odds of the trade working, but they are not 100% required, okay? So these are the patterns. For supply, we have a rally base. Let me draw this out. I was doing some homework. That was the last picture. Marking homework for people in the private group. You know, you always got to make sure that people understand how to identify and draw zones, because it's very important, because it's the whole theory in the base. It starts with drawing and identifying where the big money is buying and selling at with these zones. So it's an important concept for people to understand, right? So for supply, we have over here on the top left, that is one of the supply patterns where we have price rally, base, and drop. And these big red candlesticks going down to the downside, that is a lot of money coming into the market. So what we need to do as supply and demand traders is to identify where the origin of that imbalance occurred, okay, where the imbalance started from, right? And that is the rally base drop up here. And then same thing for supply, we have a drop, base, 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 drop. Now these basing candlesticks, the base in these zones, I should talk about this in a minute, but I will mention it here, usually consist of 50% zones, and then they all have a imbalance afterwards. So you have a drop, base, 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 drop. And then for demand, we also have a drop, base, rally, and a rally, base, rally. What you will notice about all these zones is they have 2 things in common. They all have a base. I'm circling the bases for you guys. This is where price is going sideways. And they all have an imbalance. Look at this strong move to the downside, right? Those are a lot of imbalances. That's a lot of buyers or sellers coming into the market. So we need to identify these areas on a chart. And then once price comes back into these areas, we want to be looking for buying or selling opportunities, because previously they saw value in it before and they traded at them. There's a theory out there that they have like 1 million buy orders sitting, say, at this demand zone. Let me say this. there's one side of the theory of this trading strategy is that like they have 100,000 buy orders down in here, and once prices touch it and go up, well, now they have like 50,000 left, so prices are going to go down lower. I don't like to subscribe to that theory base. All I see it as is value. Where did they see value in the market before? Clearly, they saw value here because price rallied up. So hopefully, when prices return, they will see value in it again. That is kind of the theory behind it. So we just got some more patterns really quickly so we can help you guys identify patterns. Once again, this is a drop-based rally down here, drop-based, very strong rally, rally-based drop up here, rally-based drop up here, okay? And there are some little demand zones in here, but we are going to get to the chart to help you identify these zones, okay? But you'll notice that every picture that I'm showing you, every zone, look, I'm going back to it, imbalance, right? They all have very strong imbalance of where prices originated from the base. We are imbalanced traders. We are looking for imbalances in the market, so that's what we are trying to do. Right, and then here, a big rule to remember is that we can only ever buy in demand and sell inside supply. We can never actually sell inside demand and buy in supply, right? That doesn't make any sense. If they previously dropped a lot of value here in this supply zone, why would we be looking for buying opportunities if previously they saw a lot of value there before, right? We've seen myself, other people, we are consistently making profits from the market by trading this. So we want to make sure that we actually understand how to identify and draw them. So, ooh, what is that? I just split this thing into two. How did I do that? Okay, cool. So we're going to get into it. But first we have to talk about distal lines and proximal lines, the base. This is how you always see me. If we go to the chart really quickly, you see me drawing out the zones. Well, how exactly do we draw it? Really quickly, very simple. There's just two lines. There's no need to talk too much about them, but there's a distal line and a proximal line. What we're trying to do is just highlight the base of where the meat of the basing candlesticks are, of where the imbalance originated from, right? So if we go to a chart, we start with current price and go down to the left because we are looking for demand. And we start by seeing these strong imbalances. Look how prices open and very strong imbalance to the upside, okay? So that's what we are trying to do, is mark out. I'm not trying to go like this, guys. I see people going like this. I see people trying to mark out a whole zone like that. That doesn't make any sense, okay? Where did the imbalance start from? Did the imbalance start from here down below, or did the imbalance start up here? You guys tell me. All right, it started down below, right? So we are trying to get closest to where the imbalance started from without being a greasy trader and trying to pinpoint. And I hate when people do that, is they scroll right into their charts like this. Don't do this. They scroll into their charts and then they manipulate the chart like this by scrolling it up. And they're like, okay, I'm scrolled in. Oh, well, we got demand here. We got demand here. Oh, we got supply here. I'm not interested in doing that. Take a step back, scroll out of the chart, and let's see where the proper real imbalances are, right? So I like to scroll out. I like to see all these candlesticks, but my eyes are always usually going right in this general location, right? That's all I really need to see, but I'm not scrolling into the market to say, whoa, where's every little zone, right? Because there's certain things that we need to make sure that we need to do to qualify a tradable zone versus a non-tradable zone. We don't just simply trade at every supply and demand zone. And the reason why we want to make sure that we are trading at tradable zones is because they are a lot higher probability. This has been heavily back tested, all right? Not just by myself going through hundreds, thousands of trades, but I asked people in my private group, hey, can you back test or not back test? Can you review the last 100 trades and get back to me with these stats, please? So that's why it's important to work as a group to see what is working and what is not working, right? And we're going to talk about that in a minute, but let's start drawing out some zones. So for a supply zone, we're just going to mark it out like that. Supply up there, demand down in here, right? We got some demand down in here, okay? Even down here, we scroll down to the left, we got some more demand down here, demand down here, right? Once again, I am not drawing my zone like that, including the big the big imbalance to the upside, right? I am getting closest to the origin of the imbalance without getting too nitty gritty saying, oh, look, that's really where the imbalance started from. No, don't do that. Just we're trying to highlight approximate areas of where, the base. We're trying to just hover around the base, just screwing around the base. Okay, so like we said, oops, what am I doing? Let's remove everything. And then there was that demand zone that we forgot to draw out. But we can go to another chart. Let's go to another one. Let's pick a random one. Aussie CAD, that sounds fair. Aussie CAD, same thing, any time frame. You don't like the 4-hour? Let's go down to the 30-minute, okay? What are we trying to do? Identify where the big money is coming in, buying and selling, right? Proximal line and distal line of where the buyers are coming into the market. Nah, not really down there. That's my demand zone that I would keep on my chart. Why? Look at the amount of buyers that came in. Big move to the upside, okay? So that's exactly what I would want to keep on my chart. We go to another market. Let's go to, we look at coffee. We could say, where are the big money buying and selling at? Well, we start with the weekly time frame. This could be any time frame. We draw out our zone, right? And for supply, we can go up here. Once again, these are the patterns: the drop-based drop, the rally-based drop, the drop-based rally, and the rally-based rally. Okay, once again, let me just show you guys. Right, these are the 4 patterns that we are trying to trade: the rally-based drop, drop-based drop, rally-based rally, drop-based rally. And let's continue on, because here on drawing zones, here are the 2 zones: supply up here, demand down below. Okay. Proximal line and distal line. I'm just trying to circle the base, right? We already talked about that, how to properly identify and draw zones. And then I went on to say, let's see here. So now that you know how to draw and identify zones, let's do one more practice, because I think you guys might need one, just for the guys. And if you don't need it, well, this is bonus for you, okay? Right? If I'm looking to draw out my zones here on the weekly time frame, right? This is a zone that interests me up here. Rally-based drop. Look at that imbalance to the downside, right? Really good, strong move. That's what I'm interested in doing, trading up in here, right? We're trying to cherry pick our zones. And now you might be thinking, cherry picking is not a good thing. Cherry picking is a great thing. Trading, you have access to sit on the sidelines and wait for the trade setup to occur, and then you get into your trade, right? Nobody's forcing you to trade. You should be cherry picking your trades. You should only be trading your A+ trade setup. You shouldn't be taking B trades or C- trades. You should be taking the top quality trades. And this is why I'm personally a fan of trading multiple markets and not just looking at one or two. Yes, there are pros and cons to each of them. If you only trade 1 or 2 charts, you are going to get to know those 1 or 2 charts extremely well. But you might not have the best trade setup every single time, right? Versus if you trade multiple markets, you can have access to so many different pairs or markets out there, and then you can qualify them based off of a set of criteria you need for a trade in order to take a trade. Okay, so we could go down to the 5-minute. You think, oh, is it the same for the 5-minute? In fact, let's switch it up just for you guys. 5-minute. Okay, well, what do? We look for demand. I'm not a big fan of this, so yeah, no, I'm not gonna draw it out, but I like the supply up there. This was a nice demand zone down here before, right? There are some really good, we even scroll back from down here, really nice imbalances. These are zones that I'm trying to be trading at. Nice demand, nothing down in here, right? No good imbalance to the upside. Maybe down in here, but I'm not a big fan of it. I like this whole area up here. Supply, demand, we got some, nothing too great. I like this demand zone, rally-based rally. Right? These are nice rally, base, very strong move to the upside, right? Notice how all these zones have strong moves. They're not grinding down, okay? Let's continue on. Now, when it comes to qualifying at tradable zones, now that we know how to identify the 4 patterns that we use, I go on to say, now, when you look at a price chart, you should be able to see where these patterns are everywhere. Now, you might be thinking, should you trade all of them? I just talked about this, right? We don't want to be trading all of them, right? Which one should you trade? Well, let's talk about the qualification of these zones, because we want to make sure that these zones are qualified to actually be good zones. And there is a list of things, and we're going to talk about 3 of them that make a tradable zone versus a non-tradable zone. And I've uploaded a video on this talking about it. I'll show you a little picture, but it's going to be in the tips playlist for you guys to check out. Once again, that's going to be in the description below. Let's talk about supply. So in order for a supply zone to be considered a tradable zone, we must require the zone to do one of the three things. Number one, it must take out an opposing demand zone. Okay, prices must take out an opposing demand zone. Number two, it must be responsible break for a trend line. In this case, an upward momentum trend line. We are going to talk about this in a couple of minutes, okay? It must break a trend line. And number three, in my opinion, the most important, every zone must have a strong 2-to-1 imbalance. Going back up to this is one of the main reasons why these traders that trade this methodology fail. Because I ask people, send me a trade review. They send me a trade review. I'm like, why are you trading at this zone? It's a horrible zone, right? All of these zones that I'm drawing out, they all have very strong imbalances, right? Go down here, okay? Look at the imbalance. The first 1 to 3 candlesticks, very strong move that goes over 2-to-1. Same thing with this supply zone, over 2-to-1. In fact, I get a lot of my traders in the private group to say, can you score out your zones from scoring system wise, like an average, a decent leg out imbalance versus a really good imbalance? And then can you total up your winners and losers to see which one produces way better results? 9 times out of 10, they come back to me and they say, the one with the strongest imbalance tend to work 85% of the time, right? It's like, great, you should be trading those, right? So I'm trying to tell you, don't trade every little zone you see. Make sure it's a tradable zone and it qualifies as a tradable zone and has a 2-to-1 move away. Put that down on a piece of paper right now. Make sure I'm still recording, please. Am I? Ooh, thank gosh. Could you imagine if I wasn't recording? Oh my gosh. Need a sip of this beer. Drinking Modelo. You know, everybody loves a good Modelo. I'm here in Mexico. A lot of people, the Mexicans prefer Modelo. It's definitely the most popular drink out there. You might think, oh, it's Corona. Not really. It's up there, but it's not really. I think it's a popular thing for tourists. Anyways, let's continue on. Okay, talking about beer now. Told you, we're going to get off topic on some of these things, but it is important. So let's go back to, say, I don't know which time frame. Let's go to the 4-hour time frame, USD yen. So if we're going to be looking at drawing out zones, okay, what are we trying to do? We need to draw zones and make sure it's tradable zone. Did this supply zone up here take out an opposing demand zone? Yes, it did. It took out this area of demand here. So this zone up here that I just drew out is declared a tradable zone. And so we want to mark it out as a supply zone, okay? It also broke upward momentum line, which is another bonus thing that makes it a tradable zone, as well as it has a 2-to-1 move away, okay? That's a zone I want to trade. Versus these little demand zones, talking about, you know, imbalances and tradable zones. This is demand. Like, it removes supply zones. It's a drop-based rally. But look at the imbalance, guys. Look at the imbalance between this supply zone and this demand zone, right? There's a big difference. This is a lot of sellers coming into the market, so I want to be trading this zone, right? That's a tradable zone, and I want to be looking for selling opportunities if and when prices come back up into that zone. Same thing with this area of supply, right? Very good imbalance to the downside, takes out demand. That's a zone I want to be trading. Same thing with this previous area of supply here. Rally-based drop supply took out, made a new low in the market, took out demand. That's a zone I want to be trading at. Same thing with this demand supply up here. Same thing with this supply up here. All right. Those are all zones I want to be trading at. Okay. We could go to another one just as an example because practice is important here. Okay. Same thing. Supply up here. I like it. Took out demand zones. Broke upward momentum. So demand down here. Demand down here. Let's change up the time frames. Let's go 1-hour time frame. We've got a nice rally-based rally over here. I see this stuff so quickly because I've been doing this for 8 years, so it's going to take you guys a little bit longer. I understand that. But start with a fresh chart and just look for supply and demand zones that we've identified, right? And so that's what we're trying to do. Trade at these zones when prices come back to them with multiple time frame analysis, okay? Making sure that price is a tradable zone. We look at a trade review. A trade review from me. This is a trade that I took today on euro dollar. What was I doing here? Rally base drop supply zone up here. This is one of my one time frame trade sequence setups, and we'll talk about this. But this rally base drop supply, very strong and balanced to the downside. Remove demand, right? Scrolling so you guys can see. And I trade it when prices come back up. And I just got out as a 2-to-1. It's the holiday season. I just want this trading year to be done. I just want to get out of this market, man. I'm exhausted. I didn't take a break during the summertime. Usually I take a week off during the summer, and I never did that this year. So I just want to peace off for 2 weeks, I'm telling you. Whew. So that's a nice little supply zone. Now, this was a demand zone down here that I wanted to buy at, but prices never came back, right? And so there's nice demand here. There was some nice supply up in here, right? There's zones everywhere, but we want to make sure that we select certain zones as they are higher quality, okay? Let's go back to our ebook. Proximal lines, what makes a tradable zone, and this is the vice versa for demand. We talked about taking out an opposing zone, breaking trend lines, imbalances. It's the exact same for demand zones. We need price to take out an opposing supply zone. We need price to it doesn't have to do all three, but it has to do either 1, take out an opposing zone, 2, break trend line, or 3, have a very strong imbalance. And fun tip for you guys, write it down. Always require a 2-to-1 imbalance. Do not trade it if it doesn't have a 2-to-1. I'm telling you. I don't know. You tell me. If you have 50 trades back tested or journaled, you let me know how they've worked out compared to your strong ones, okay? Before we get into trends, I have to cover this because it's one of my pet peeves in the market is when people talk about flip zones. And I hate this when supply and demand traders talk about this. Say you have a nice supply zone up there, right? Really good zone. I like it. If prices continue to rally up like this, it rallies up, right? And then it breaks through. Just because you removed a supply zone does not make this now a demand zone. It's not like support and resistance where you take out resistance, it becomes supply. It becomes support. Or it's not like you take out support, it becomes resistance. That's not it for supply and demand. It always has to represent one of these patterns or in a massive sideways market. Right? So if you ever see this where it blows right through a supply or demand zone and there's no supply or demand zone that was created there with the 4 patterns we talked about, then it's not demand or supply, okay? So if you have price blowing right through, this is not new demand. It doesn't make any sense to me, right? You could have demand down here as long as it represents the 4 patterns we talked about, but this, no, don't do that. Don't do that. Don't do that. Right? Sideways markets are easy to trade. I mean, sometimes they don't always look like it, but if you go to Aussie, New Zealand, you pop to the weekly time frame. I mean, like, not even a weekly. You pop to the monthly. Come on, it's not rocket scientist stuff. Like, where are the buyers stepping in? The buyers are stepping in down here, and the sellers are stepping in up here. So why wouldn't you trade the range? Why would you be looking for buying opportunities up here? Right? I mean, clearly for the last 5, 10, 12 years, it's been going sideways. So why would you be looking for buys up in here, right? You would look for selling opportunities. Why? Because the last 10, 15 times it's been up here, sellers have came in. It's the same thing for demand, right? Buyers are coming in, demand, okay? That's all we're trying to do is to identify where buyers and sellers are coming into the market, okay? Let's talk about trends. Whew, I'm going to blow a gasket here. Trends, okay, very touchy subject. It's a very old age discussion, as I mentioned here, that divides most traders. As you probably know, traders define trends a million and one ways. Various methods used, moving averages, Dow Jones, higher highs, higher lows, uptrend, lower lows, lower highs, downtrend, Elliott wave theory, impulse corrections, whatever, you name it, it's all been used indicators to help them define trend. It is information overload. I get it, and that's one of the main problems that a lot of traders have. When it comes to supply and demand, we like to use a certain way. I'm not here to tell you how to determine trend. I don't think that's my job, right? But what you need to do is be consistent with the way that you approach how to identify trend, okay? Whether that is higher highs, higher lows, whether that is using the 50 moving average. You have to be consistent because I think, in my opinion, it doesn't take a rocket scientist to see that this is sideways, okay? You go down to the 1 hour time frame. Let's go 4 hour. It doesn't take a rocket scientist to see that this is clearly downtrend, Okay. But if you're going to sit there and say that this isn't an uptrend, I think that's a little delusional, right? You're coming from Duluville, as I like to call it. People are acting delusional. You call them Dulus. Oh, they're a Dulu. What's an important concept that I need to explain here is make sure that you are consistent that the way that you approach trend. I'm going to talk to you about how I determine trend. And that is going to be the way that I will determine trend is a mix of supply and demand. Either we remove multiple demand zones and we are in a downtrend, all right? Or we can connect lower lows, lower highs. So if we go to, I don't know, gold, for example, clearly it's in an uptrend. It doesn't take a rocket scientist to see this, man, right? How would we draw momentum? Connect it to pivot points. Very simple, right? And I have other videos that you might be like, oh, I don't fully understand it. The tips videos will cover how do I determine trend, how you should identify trends, and all that good stuff. All right, so have a look through that at the end of this video. So what we're trying to do is identify pivot points in the market, right? Lower lows, lower highs, higher lows. And I'm not talking about, this higher highs, higher low. Once again, scrolling into the charts. I'm not talking about this. Oh, it made a high. Oh, this is now a high. This is now a high. This is now a high. No, we're looking for peaks and valleys. Do this with me. Come on, guys. Do this. Peaks and valleys. Peaks and valleys. Peaks and valleys. Okay. So we're looking for big moves in the market, right? We scroll, I don't know, back here. If this was the current price action on my chart, as of what this looks like right this second, my trend line, I'm going to say it's in a downtrend. My trend line is going to be like that. Lower lows, lower highs, right? We're in a downtrend. It doesn't take rocket scientist stuff to see this, okay? Right? Sideways markets, we're just removing one opposing zone. Maybe we break trend lines, okay? We're going to talk about that in the side of confirmation. So whatever way that you determine trend, make sure that you are consistent with it, okay? And what we need to talk about is multiple time frame analysis. Now, this is a very important concept for traders to understand, and it is probably the most important concept for supply and demand traders, okay? Because we talked about how to identify and draw zones, which is great, right? Great. These are very nice zones that I want to be trading at. We don't simply just buy or sell at any zone, right? We want to make sure that they're tradable. Yes, you might be able to backtest this and just trade the zone straight up, but you might want to backtest that. It's always important to backtest. But what I'm going to do is, if we are in an uptrend on the 4-hour time frame, understand whenever you change a time frame, you are almost practically changing the trend, because here on the 4-hour, we're in an uptrend. But as you can see, the last 10 candlesticks have been going down. We switch to a 5-minute time frame, the trend is going to be in a downtrend. Oops, what did I just do? Oh, there we go. You go to the 5-minute time frame, we're trending down, right? You go to the 1 minute, we're still trending down, right? We go to the weekly, we're like kind of in a sideways market. As of now, I'm kind of looking here. We're kind of breaking these lower lows, lower highs, right? We've removed supply over here. We removed that supply zone. It's been broken over here. So we don't do that in downtrends. We don't break lower lows, lower highs, or we don't remove supply zones in a downtrend. So in my opinion, we are in a sideways market. And so we have demand down here now as well. Okay. So that's our next demand zone. And we're trading in a sideways market. Long term, scroll out. Okay. You might say we're choppy, sideways, uptrend. Maybe over the last 100 candlesticks, we're in a downtrend. Okay. What's important is that you're consistent, right? And there's an important concept of trading that you need to understand. And that is, there is no best way to trade. Right? We talked about this at the start. There is no best way to identify trend. What's important is that you are consistent with it, right? Traders in my private group, I go into detail about this, about how to, how we properly draw momentum lines, and how we properly determine the uptrend and downtrend. It will be a little bit confusing because it is one of the more confusing parts. And so I don't want to get into that really right this second, because it can go over some people's head when we talk about trend. But very simple: lower lows, lower high, pivot points, peaks and valleys, okay? So let's talk about multiple time frame analysis. One of the most important concepts. If we have a supply zone, let me ask you this, okay? We have a supply zone over here. We just talked about, let's go to a real example. 4-hour time frame. If we have 4-hour uptrend and an uptrend over here, right? We got our trend line, whatever, and we like this demand zone. Great. We are going to be buying, looking for buys when prices come down here. We're in an uptrend on the 4-hour. There's a theory with this trading is that Newton's law of motion, that an object in motion will stay in motion until it hits an opposing larger force, right? Remember Newton growing up? An object in motion will stay in motion until it hits an opposing force or runs out of steam. It's the same thing as trends. The only thing that can stop a 5-minute downtrend is a higher time frame zone. Okay, so this will not lose you. Trust me. And I'm going to explain this. It might be like, what do you mean? What do you mean? Let me explain this. Watch. I'm a master at explaining this. If we are here at the top of a hill, there is us at the top of the hill. Okay, there is us. And if we have a ball, let's say we have a tennis ball. No, a basketball. We have a basketball at the top of the hill. I have a basketball in this room. Let me get it. Look. I got a basketball. So we have a basketball. We have a basketball now. Okay. So we are at the top of the hill with our basketball. And we let go of the basketball. What is the basketball going to do? It's going to roll down the hill, right? And it's not going to stop at the bottom of the hill, just right there. It's going to run out of steam after, there's no more motion. There's no more downhill. It runs out of steam, right? I don't know the exact terminology, right? But there's no larger opposing force down there. So if we roll a basketball and say we put a tennis ball, a smaller ball. I don't have a tennis ball, but I have a beer can. We have a beer can down at the bottom of the hill. We let go of that basketball. The basketball, do you think that basketball is going to blow through the beer can? Or do you think the beer can is going to stop the basketball? The basketball is a larger opposing force, right? So the basketball is going to blow right through the beer can, all right? That is a smaller time frame. That's equivalent to, a 4-hour uptrend going up against a 1-hour supply zone. We are not assuming that zone is going to be removed, okay? This is the theory that we're talking about with trends here. This is, how trends will turn from inside out. We are talking about confirmation, one of the most important concepts supply and demand traders can trade. And this is one of the setups that we trade. So we have a ball. There's nothing down there. It's not going to stop, right? We put a beer can at the bottom of the hill. The beer can is a smaller force, so it's not going to stop the rolling basketball because the basketball is a larger opposing force, right? Now, if we put something the same size, say we put another basketball down there, okay? We put another basketball down at the bottom of the hill, all right? Now we got a basketball. What do you think is going to happen to this basketball? Do you think that this basketball that we are rolling down the hill is going to hit this basketball at the bottom of the hill and then ricochet all the way back up? Do you think that's going to happen? No, right? The basketball has, it has speed. It's the same size, but it has speed behind it, right? So it's going to hit it. Maybe it gives a little hiccup, right? Maybe it bounces back a little bit, but then it's going to continue on in its same momentum, in its same direction, because it has momentum behind it. This is the same thing like you have, I should really have examples for you guys. Like this supply zone. I mean, hey, this works, right? We're in a 4-hour uptrend. We're in an uptrend at this point, right? 4-hour uptrend is going uptrend. We hit this 4-hour supply zone. That would be our basketball, all right? We have a 4-hour basketball going in an uptrend. We are touching a 4-hour basketball supply zone, all right? It's going to give it a hiccup, right? Gives it a hiccup and continues in its direction. Hiccup right here. Hiccup, continue in its direction, all right? So we go back to this drawing, right? It's making sense now. Now, if we put a larger force, we got a Tesla, all right? We got a Tesla down at the bottom of the hill. I don't own a Tesla, but for some reason, some guy has a Tesla, parked it at the bottom of the hill, thought it would be a good idea at putting his Tesla at the bottom of the hill when I'm trying to roll down basketballs, okay? Do you think that basketball up here that we are about to roll down the hill is going to come to a complete stop when it hits that Tesla? Yes or no? Yes. Why? Because the Tesla is a larger opposing higher time frame force, right? This is a 4-hour uptrend going in an uptrend and then turning from inside out. So we could talk about coffee as an example, okay? We have price coming into weekly demand, all right? Price is coming into weekly demand. Here we go, weekly demand, tradable zone, good zone, price coming in over here, okay? Great. We go down to the 4-hour time frame, all right? We got our basketball. What's the trend, right? What is the trend? Trend's in the downtrend, right? Clearly going up, lower lows, lower highs, lower lows, lower highs. We just came into a weekly demand zone, okay? The weekly demand is the Tesla, and the 4-hour downtrend is that basketball that we are rolling down the hill. That 4-hour basketball is coming up into an opposing larger time frame force, right? An opposing larger force. It touches that Tesla and starts to rebound. This is price turning inside out. Price will always turn from inside out in trading. Nobody in trading can go against that statement. You think you can? Let me know, because every time frame trend turns from inside out. Price has to first turn on the 1 minute before the 5 minute. Price has to first turn on the 15 minute before the 4-hour. Okay? It's the same thing. All right? So, price going into weekly demand, we look for evidence of buyers coming into the market. Okay? That's what we are trying to do here. Right? We got a Tesla, ball rolled down. That's our larger opposing time frame force. Price comes into our weekly demand, right? Price turns from inside out. There's a side of confirmation. Let me see where I am on this book. Multiple time frame analysis. Right here is the light bulb. This is the light bulb moment that I had, right? Understanding trends. We will use Newton's law of motion to explain what happens with trend. We talked about that. Trend will continue in its direction until the bend at the end, right? Price hitting that opposing higher time frame zone, right? Let's see. This is why it is critical for us to know where we are on the higher time frame. We always start on the higher time frame, right? Let's get into it. Okay, we got an example right here. Okay, great. Let's just use this since we're in a book. Okay, Aussie dollar, right? Daily supply up here. Daily supply, price coming back up into daily supply zone. We want to be looking for selling opportunities. Why? Right? Because institutions, going back to the start of the video, institutions were looking for selling opportunities in here. So that's why, right? Big imbalance to the downside. It's a rally-based drop supply zone. Price coming back up into supply. We want to be looking for shorts. Price comes back up into supply. We go down to the 1-hour time frame, right? If prices are going into our higher time frame supply zone, the trend is going to be in an uptrend. We talked about it's different time frames, right? If you have price inside a 4-hour demand zone, we talked about this example on coffee. We go to that weekly. Price going down into weekly demand, right? Weekly demand. Prices are going to be in a 4-hour downtrend, right? Lower lows, lower highs, lower lows, lower highs, right? That's okay. That's fine. That's great. But we're coming into a weekly demand zone. So maybe as a swing trader, you want to start looking for long opportunities, okay? So that's what we get. We get higher highs, higher highs, higher lows, right? And we get a side of confirmation. Now, confirmation is one of the most important concepts. This is your evidence to say that sellers are coming into the market, okay? What is confirmation? This is another video that I've dived deep into these course videos, but I'm going into a lot more detail here, talking about confirmation that, I have in these videos right here, but I'm going to talk about it here. Hold on, let me get a sip. Oh, this is really good stuff. Really good stuff. Good knowledge, good beer. How can you argue that? Good knowledge and good beer? Sounds like a great time. So when it comes to confirmation, it's something that I always require in my trades, right? So we go back to that ebook. We look at the confirmation. This is going to be evidence that sellers are actually coming into the market, and we trade the pullback, all right? This is one of the trade setups. Making higher highs, higher lows. Let me take a picture of this so I can draw, okay? All right, higher highs, higher lows. And we're going to get into real trade examples so I can show you happening this on live charts. All right, higher highs, higher lows. Let me redraw this. We break upward trend line and remove this opposing zone. And we trade this as our supply zone, right? It's a tradable supply zone on our lower time frame. This is our entry time frame. So that's going to be, basically our confirmation. This is called our confirmation. Price inside a higher time frame zone. The whole point of the higher time frame is to identify where the big money is coming into the market. Secondly, identify the trend, because it's important to understand, are you trading in an uptrend, downtrend, sideways market? It changes everything. Okay? But we are now at that point, we are inside our higher time frame zone, but we need to see evidence of sellers or buyers coming into the market. So we have price in our side, our higher time frame zone, and we see evidence of sellers coming into the market. Price turns from inside out. Remember, we talked about that basketball? Well, now we have a 1 hour time frame coming up into what time frame is this? A daily time frame. Okay? This is the basketball hitting that Tesla. Okay? Different time frames. Could be the 4 hour, 5 minute, could be weekly 4 hour, could be monthly, daily. It doesn't matter. It's the same top down analysis. Okay. Trend turns from inside out. We break upward trend lines and remove opposing zones. Remember at the start of the video, we talked about tradable zones. What makes a tradable zone? Strong 2-to-1 imbalance, breaking trend lines, removing opposing zones. Does this zone have all three? Yes, it does. Yes, it does. It broke upward trend. It removed opposing demand, and it has a very strong imbalance. That is what we are trading on the pullback. Okay, very simple. We would place our sell limit at our proximal line. What is your proximal line? We talked about this earlier in the video. We have our proximal line and our distal line. If we go back to the chart, weekly time frame, scroll in, proximal line up here, covering the bases, and our distal line is going to be at the end of the base. Same thing up here. If we're going to draw this out as our supply zone, distal line at the top of the wick, proximal line hovering the base, right? We're just trying to get the general base, okay? Let's go into, so now putting it all together, not going to lie, that was a lot talking about trends and confirmation, but we're going to put it all together here. Let me look at this sheet because I have everything written down to make sure I touch on. Concept of supply and demand, how to draw zones, talked about trends, we talked about confirmation, about how price turns from inside out. Top-down analysis, that's what we are going to talk about now. Take profit, entries, stop loss, trade management. Whew, this is the good stuff, right? It's one of my pet peeves is when people reach out to me and they say, I would only be profitable, but price just stops me out by 1 pip and then reverses. I would only be profitable, but prices just miss my take profit, then reverses and stops me out. That's completely dulu, all right? That's delusional. If that's the case, move your stop loss an extra 1 to 2 pips, right? If that's the case, you keep getting your take profit hit by 1 to 2 pips, move your take profit closer 1 to 2 pips, right? It's common sense, guys. So putting it all together, let's get into this top-down analysis. Putting it all together, when price reaches our higher time frame, right, our curve, supply or demand zone, that is when we want to start looking for buying or selling opportunities, because this is where we identified where the banks and institutions are buying and selling at, right? We talked about that. We start with our higher time frame. Why? Because we need to understand where the big money is buying and selling at. This can be used for weekly swing trading, long-term position trading, scalping in the markets. It's just different time frames. If you're asking me which ones are best for different time frames, there is no magical time frame. This is golden nuggets that I'm dropping right here. Okay, because I get this question a lot. What's the magic time frame? There is none. But if you're looking to do scalping, you're probably going to want to be using like the 1 minute or the 1 hour or the 4 hour as your highest time frame, and then you're using the 1 minute, maybe the 5 minute as your entry time frame, maybe the 15 minute. Okay, so let me say this: scalping in and out of trades, 1 hour, 1 minute. Day trading, 4 hour, 5 minute, or 4 hour, 15 minute. All right, intraday, daily 1 hour, daily 30 minute. Swing trading, weekly 4 hour or weekly 2 hour. Long-term position trading, monthly, daily. Okay, that's what I would recommend. Everybody's different. Some people will have more charts. Some people will have less charts, right? You can always add more or less or remove more depending on how you perform as a trader, because it can be very overwhelming for a lot of traders. Like I explained, this all right here, like having 50 charts, try doing set and forget, confirmation, the one time frame trade setup, and looking at 50 different markets, and then looking at not only swing trading but day trading. not only day trading, but scalping. Next thing you know, you're looking at the monthly, the daily, the weekly, the 4 hour, the 1 hour, the 1 minute, the 5 minute, and looking at 50 different markets. It's very overwhelming, right? So calm down, add what you can, and you can always add more. If it's too much, slow it down. Stick with one setup, and that's what we are trying to do today. Is I'm just explaining to you one trade setup, like one top-down analysis, but there are set and forgets that I have in these other videos. There's the one time frame trade setup that I've backtested over 100 times, right? That these were all videos in that tips playlist that I told you about, right? So let's go back to that ebook. Okay, so putting it all together, like I said, this will all be the ebook for yourself. Will be in, so you can go through it yourself and look at the top-down analysis. Will be in the description below, moneyballtrading.com. Putting it all together, when prices reach our higher time frame supplier demand zone, that's when we can start looking for buying or selling opportunities, because that's what we have identified. We are going to, I'm going to get into many examples, but let's continue. Our next job is to use our lower time frame or our intermediate. Screw the intermediate, we're just using 2 time frames, okay? And wait for prices to turn inside out. Confirmation. Remember Newton's law of motion and how we use trading supply and demand. This can only, what's the only thing that can stop a 1 hour uptrend? What is it? I'm asking you guys. What's the only thing that can stop a 1 hour uptrend? A higher time frame opposing force, right? A 4 hour, a daily, a weekly supply zone, aka a higher time frame supply zone. So a 4 hour or daily, man, it's like I wrote it. I did write it. I did, right? No, I'm not even reading. I'm just like forecasting what I would say. And I'm just like, wow, look, that's what I said. This is the same downtrends, right? The only thing that can stop a 1 hour downtrend is what? A higher time frame demand zone. Okay, we just talked about that. This can be used on all. This can be all used on all time frame sequences, depending what you are. Guys, like, how did I know this? How did I know this? So once price enters a higher time frame zone, we want to wait to show us evidence of buyers or sellers taking control. What will we see happen? Momentum lines being broken, opposing pivot point zones being removed, and other criteria based on the set of criteria plus odds that we talk about. That not necessarily going to get into, but these are 3 of the main ones. If nothing happens, we cannot say buyers or sellers have taken control. Guys, did we not just talk about this? This is money. This is money. We're going to be running to the bank lolling. Like, you know, it's great. Once you start trading, you know, you see all these people going to the bank, you're going to be lolling to the bank with them. Isn't it fun? You know, people hate going to the bank. Why is that? You should be lolling to the bank. I'm going to the bank. Right? It's fun. Next time you go to the bank, try laughing to the bank. It's fun. It's a little joke you can have to yourself. Going to the bank. Okay, anyways, back on track. Okay, so this is an old trade review. Top-down analysis, higher time frame curve. I look at the trend, all right? So this could be a better picture, but we'll talk about it. So price coming up into higher time frame supply zone, okay? Price coming up into higher time frame supply on the daily time frame. And what do I need to see? I need to see evidence of sellers coming into the market. Why do I want to be looking for selling opportunities? Because we are in a daily supply zone where previously a lot of sellers have came into the market, right? So we go down to our lower time frame. What do I say here? What do we want to do? We look for counter trend sells with confirmation. What will happen on the lower time frame? We will start seeing smaller time frame demand zones being removed and momentum lines being broken. Perfect. That's what we see here. 30-minute time frame, right? Momentum lines being broken, opposing zones being removed. This is not the best example, but I'm going to show more. You know, this is not the best example. Let's continue to a different one. I should change that. In fact, let's look at a trade review from Barrows, USD CAD. Okay, this is it. We're going to look at a trade review from a member in the private group because this was a really good one. So prices were coming up into 4-hour supply up here, right? Why is this 4-hour supply, guys? Number 1, big imbalance to the downside. Number 2, remove demand. So it's a tradable supply zone, right? Tradable supply. Price coming back up into this 4-hour supply over here, right? Do you want to be looking for selling opportunities on smaller time frames? Look, 5-minute uptrend. Why would you be looking for selling opportunities? People are probably looking at you like you're an idiot. Why are you looking for selling opportunities when prices on the 5-minute time frame are in an uptrend? Because you understand Newton's law of motion. Price turns from inside out, right? So this was the trade that he took on the 5-minute time frame when prices came back up. In this case, higher highs, higher lows, higher highs, higher lows, big imbalance to the downside, removing opposing pivot point zones right here, right? And then we are trading the pullback up into this rally-based drop supply zone, right? Rally-based drop supply, we have our order set. Once the confirmation is set, or you can set an alert if you don't want 20 different pending orders, which I don't like doing. So I set alerts. And then once prices get closer, I then put on the pending order. Very simple. I mean, that's a freaking good top-down analysis. Price going to 4-hour supply, top-down analysis. Let's look at another one. Let's look at this is something from my watch list. Okay, let's look at watch list ideas. These zones have probably already occurred by the time you're watching this video. But anyways, so we start with our daily time frame. In this case, it was the daily higher time frame. Price coming inside, higher time frame demand. Cool, looking for buying opportunities. We want to be looking for confirmation evidence of buyers coming in. Lower lows, lower highs, lower lows, lower highs. Breaking that downward momentum, removing those opposing zones, tradable drop-based rally down here that has a strong imbalance to the upside, right? That's our setup. We need prices to go back down, fill us with our buy order, and then we laugh to the bank, right? We get filled on our buy order on the pullback, and we have our take profit either 1-to-1, 2-to-1, 3-to-1, 5-to-1, 10-to-1. Everybody is different. Okay, we are going to talk more about top-down analysis, but we first have to talk about, I am interrupting this video right now because this is a certain part I wanted to include in this video the following day, talking more about other trade setups, but also my top-down, how I scan the markets, because I think it's important for people to understand that type of stuff. So on CAD Yen, not CAD Yen. So we are talking about the confirmation trade setup. There's many different ones. There's the confirmation 2 setup, which is an example. What we could talk about is coffee. We've talked about that one before. We know that prices were coming inside higher time frame demand, right? Prices were coming back into higher time frame demand, and then we went down to that 4-hour time frame. There was the demand zone from down here that I like the best as the confirmation trade setup, but then there's also this setup over here, this demand zone over here, because prices continued to make new higher highs and continued to remove opposing supply zones. So this is what it looks like, right? You know, price coming into our higher time frame zone, lower lows, lower highs. That's what I usually like to see. But instead of getting the pullback right away, which I like, prices go on to do this. Say prices go like this, like that, and make a new higher highs. Some traders will look to play that as a zone. Some traders will look to only play the drop-based rally. Some people will look to play both. It's really up to the trader of how they want to do that. But keep in mind, you start adding more and more to your watch list, different trade ideas. It can be very overwhelming. That's another setup. We could talk about the example that worked really well, if I recall. Yeah, it was this one, wheat. So this is one of the trade setups. Prices were coming into weekly demand, right? This works on every different time frame out there. So prices were coming into weekly demand, and we were looking at buying opportunities, price making new lower lows, lower highs, lower lows, lower highs, right? And then we started to break this downward momentum like that. And originally, I was thinking about getting long in here, but instead prices started making new higher highs and higher lows, and this would be the setup that traders would look to trade, right? Totally valid, totally fine. It's just a different way to approach it. As it's making new higher highs and higher low, you are continuing to buy at these pivot points as long as your demand zone or supply zone is still in control, right? Like I just explained, that would be this trade setup, while the setup we've been talking about originally for this video has been that. And this is the one that's in the book. The other one would be kind of set and forget, which would be CAD yen. We look at the 4-hour time frame. This is really good stuff, guys. I was listening to the recording, editing the video, and I was like, my gosh, this is some good knowledge. Okay, so then kind of set and forget. There's also the one time frame trade sequence, but this is also the set and forget, which is multiple time frame analysis. You start with your higher time frame. Doesn't matter if it's the 1 hour, 4 hour, 5 minute, not the 5 minute, but doesn't matter if it's the 1 hour, the 4 hour, the weekly, the monthly. Doesn't matter, right? You have a higher time frame. We talked about that. The higher time frame is always used to see where the big money is buying and selling it. And then second purpose is to identify the trend, right? It's probably not a good idea at max risking on when you're trading counter trend versus trading with the trend. I've already talked to you guys about, or maybe I haven't, not sure where this is going into the video, that trending markets perform a lot better than counter trend markets. So maybe some traders might just only want to trade trending markets, which is great, right? That's my favorite, trending and sideways markets. I personally stay away from counter trend trades. So in this instance, we're looking at CAD yen. Also, a side note on that is when trading counter trend, like if you're trading counter trend, you shouldn't really be going for 5-to-1s. You should be going for quicker take profits because you're trading counter trend in the first place. You know what I mean? It makes a lot more sense to go for 5-to-1s, 7-to-1s, or whatever, 3-to-1s, 4-to-1s when you're trading with the trend or in a sideways market rather than trading counter trend. It's already lower probability. So that's why it's important to maybe dial back the risk or ask for less in the market when it comes to counter trend. So when it comes to set and forget, we look at the higher time frame. We can see it's clearly in a downtrend, right? Lower lows, lower highs, this entire thing. This is our higher time frame supply that we talked about. And then we go down to like a lower time frame, in this case, the 5-minute, and we go back to the higher time frame zone. In this case, let's go to the 15-minute. The 15-minute, and we would trade at the extreme of the higher time frame zone as long as there is a lower time frame supply zone, quality supply zone, not just any supply zone or demand zone. We talked about this, right? Not just any, a quality zone, right? And then we could trade that to be a trade, okay? And then the other one would be the one time frame trade sequence, which is you're only strictly trading the one time frame, which are trade reviews that I was taking here on the UK 100, as well as the Euro USD, the 1 hour, the 1 minute time frame. How I was explaining to you guys. Maybe I haven't talked about it yet. Maybe I have. I'm not too sure. I still got to edit. And this is strictly based off of one time frame. And I've uploaded videos on this that will also be in the tips playlist for 100 trade backtest, multiple backtests that I've done, trading that exact setup. But it's strictly looking at one setup, but making sure that every single trade setup always has a break in upward or downward momentum. Let me say that again. When I'm trading the one time frame trade setup, I always make sure that the zone that I am trading always breaks the momentum line, the trend line, has a very good quality score, strong 2-to-1 move away, right? All that other stuff. And number 3, remove an opposing pivot point zone, right? We talked about the 3 tradable zones. It has all those things and much more that I require, that if I get into this video, it will be a little bit too much information overload. So that's what I'm going to keep it as, regarding making sure that you're trading at quality zones. All right, a lot of good stuff so far. So hey, if you guys are enjoying this so far, I really appreciate if you guys like this video, subscribe to the channel. Okay, once again, I am interrupting this video. I am editing this video, as you can see, and I'm going through and I'm making a list of notes and timestamps for everything here. And there are certain things that I did want to address that I wanted to add 1 or 2 things on just because I missed it and I know it's important for this video. And I realize as I'm now reading this, like I have made separate videos on this, like talking about how to include indicators or other top-down analysis, because you might be noticing when I'm doing these trades, like, or analysis, there's no indicators or anything like that. I don't trade with them, right? But I have nothing against them, right? But what you can use them for, trading indicators or other things that you might be using them for, indicators or chart patterns. That's what I meant to say, indicators and chart patterns. That's great. You can use them just use them in correlation as an extra probability. Hey, this buy setup is also sitting with an engulfing pattern with also support. It's not only demand, it's also a major support line. And we have a big engulfing candle with a double bottom. I don't know, right? It's just extra little confluence that you can have. Or you might say, like, hey, this is, let me type in the Discord, Bollinger Bands. Like, this is something that we were back testing, talking about Bollinger Bands. Like, is there an increase in our trading? This is why back testing is so important, like I've mentioned throughout this video. Is the demand zone that I'm buying at also sitting at the extreme of a Bollinger Band, breaking through the Bollinger Band, right? Is it testing the 200 moving average? These are just little things that add up to increase the probability of your trade working out. Not all the time. It will make a big difference. There are tons of things that I have tested and I add on my charts just for 20 trades, just to see like, hey, does it actually help out in my trading? If there's a significant difference, then yeah, I will start to look to add to it. But I am not against trading indicators or anything like that or other chart patterns. I think they really help our trading, right? But just be careful with them as they aren't guaranteed, and nothing is guaranteed in this game. Like another note that I wanted to make is even the best zones will fail and the worst zones will work, right? So just because you have a really good trade setup doesn't mean it has to work. So don't attach yourself just because it's a good trade setup, it has to work, right? We have our list of criteria of our top-down analysis of what we like to see in a trade. And if we have this all lined up, it's a good trade. Statistically, we will make money down the long run, right? If you have a quarter, heads or tails, and there's a 55% chance that it lands on heads, and you would sit there and gamble on heads every single time, right? Nothing's stopping that heads or tails coming up 10 times in a row as a losing trade, right? There's examples that I give. I'm telling you guys, in that backtest, in that tips playlist, gosh, just scroll through them and check out the ones that really interest you. Talking about probability and how you should change your mindset to think in probability, like I've just been talking about when we go through examples of casinos and how they think. Really, really good stuff. Okay. So that was one of the other points I wanted to make. Another thing is also some people will look at fundamentals. Totally fine. I look at fundamentals as well. I know I was talking about take profits and all that, making your trading very mechanical. You could use level 2 order screen, right? And you want to see the live orders coming and buying and selling. Great, you can use that. That's awesome. You can totally use level 2 order screen whether you're trading stocks, crypto, futures market, right? You're going to say like, hey, I really like this buy setup, but I want to wait to see the other buyers coming in. You're looking at the level 2 screen coming in, and then you get enter your trade, right? Or you might want to use that level 2 order screen to determine if you should get out of your trade or not, right? Totally fine. Totally fine. I'm not against any of this stuff. I know traders that do use it, right? But for new traders, it can be very overwhelming when you don't have these rules or these trading things in your trading plan that aren't very mechanical. So I wanted to touch up on that. Hey, that was everything that I wanted to touch on for this quick interruption. Let's get back to the video. Cheers, guys. Oh, I've got another Modelo here. All right, let's go. You guys should be on to your second Modelo. All right, let's continue. When it comes to take profits, because I talked about this. What did I say here? This is a very another popular topic here that divides most traders. No joke. I could write a 5,000 word essay, a 1 hour long video breaking down each topic, and I would still get questions. This would, let me know if this sounds familiar. We talked about this. I would only be profitable if a price stops me up by 1.2 pips, then reverses, right? Prices just miss my entry, and then it goes off in my direction, right? My answer to this is always, then move your stop loss to 1 to 2 pips away, right? Move your entry 1 pip closer. Move your take profit 1 to 2 pips closer. It's common sense, right? I go on to say, the truth is it's most likely not one of these 3 issues, but rather a problem with your strategy itself. Typically, supply and demand traders will enter at our proximal line with our stop loss above or below our distal line, right? That's kind of what I recommend, right? If that's going to be my trade, I am not going to place my stop loss right here on the distal line. I want to give it breathing room. So I just want to place it kind of up there, right? But some people might go up here. Some people might have it tighter. What I can say when it comes to take profit, and stop loss placements, I really recommend making your trading very mechanical, right? Just trading as a whole, because when you make your trading very mechanical, it lowers the chance of you making an emotional decision in your trading. Because each trade setup will then have a top-down analysis. I need price inside higher time frame demand. Okay, what is demand? Is it a tradable demand? Okay, what am I looking for in confirmation? All right, is this lower time frame zone a tradable zone? How do I take profits? What I recommend with take profits is, I mean, you've the example I give a lot is I've made videos on this. Once again, tips playlist. We scroll down. What did I make here? Three-step trading plan, how to create a trading plan, right? These are all going to be videos that you want to check out. How to trade like a casino, right? Traders turning $2,000 into $20,000, understanding reward to risk. Like these are concepts I really want to get into here, but I want to talk more about supply and demand, but I want to touch briefly on these subjects here because they are very important. And when it comes to taking your take profits, what I strongly recommend is being consistent. Once again, it's consistent reviewing, back testing, right? Um, if you journal your, oh my gosh, guys, the importance of journaling your trades. Oh my gosh. Nothing frustrates me more is when people come to me and they ask for help and they say, I am not having success. And I say, send me the last 50 trades that you have taken so I can have a look to see what you might be doing wrong and what you are doing right. And if they can't send me 50 trades, they're like, I didn't journal my trades. How do I know where you are going wrong in your trading? It doesn't make any sense, right? So this is why journaling is so important. This is why we actually have a backtesting tab in our Discord group, because we are always backtesting different ideas, right? People in the private group. More information on that, Moneyball Trading, down below in the description. Free training, and you'll learn more about that. We're coming up with different ideas. I mean, let's just check it out really quickly, and let's just scroll to a random post. Let's scroll way up, right? Taking 15 trades. I don't know. Let's look at something that I made. Breaking it down, winners, losers, backtesting meetings that we have as a group, trying to figure out how can we make our trading better? How can we create a better edge for ourselves, right? Because if you go off and take 20 trades, real live trades, it might take you a month, 2 months to actually get 10, 20 trades, 20 trades, let's just say. It might take you a month to 2 months. You could do a 20 trade back test in say like an hour, right? And you just save yourself a month to 2 months of time, right? So this is why backtesting is so important, because you're always looking to create a new edge. And it helps you build a belief system in your trading methodology, because when you know and you have a belief that you know the stats in your trading methodology, rather than just taking my word for it, but seeing it for your own eyes. One of the great examples I use is you have a belief system of say we go to a haunted house, right? Anybody that watches my videos knows the haunted house analogy. All right, we have a haunted house. We have a haunted house over here. Scary. All right, that's the haunted house. This is us. All right, this is us. And me, I will be the little guy over here, and this is, say you, this is you. Okay? You don't believe in ghosts, but I believe in ghosts, right? I say I think they're real, but everybody is saying that this house is haunted. Everybody that goes in there says they saw a ghost, right? And then you come along, you say, I don't believe in ghosts. You don't believe in ghosts at all. But then we go up to the haunted house, and I'm like, hey, I'm not going in there. I hear that there's ghosts in there, and I think they're real, but I don't know for sure, right? I just hear stories. You go into the haunted house saying there ain't no ghost, they're not real, right? You go into the house, you spend 5 minutes inside the haunted house. 5 minutes later, you come running out of the haunted house, and then you come running back, and I ask you what happened, and you say I saw a ghost, and you actually saw a ghost. Your belief system from there on out is going to be way different, right? Your belief system flipped on a switch, saying you actually saw a ghost when you went in there 5 minutes ago. You didn't believe in ghosts. 5 minutes later, you're coming out saying you believe in ghosts, right? You are going to have a different belief system from there on out, because it was from your personal experience. Versus me, you probably just cemented more of my belief system into that the ghosts are real, right? But from here on out, you are going to have, even though 5 minutes ago you never believed in ghosts, you believe in ghosts now, right? So that's why it's important for you to do your back testing and journaling, because how do you expect to get better as a trader. Now, going back full circle, right? How do you know when it comes to take profit? You might be asking, is 1-to-1 best? Is 2-to-1 best? Maybe 1-to-1, maybe 2-to-1, maybe 3-to-1, right? Let's just use those as an example, right? You understand if you are going for a 1-to-1 trade, you are going to have a higher win-loss percentage in your trading. Why? Because you need price to go less in your favor than if you are asking for a 2-to-1 or a 3-to-1. You might have price. Let's use a trade example. This is a perfect example because this is the short we talked about earlier. This is where I was getting short, right? Over here. I got out at a 1-to-1, right? That's great and all. The person going out at a 2-to-1 might have made money, but the person getting out at 3-to-1 did not make money because price after 2-to-1 reversed and stopped out, right? Maybe they got out at break even, doesn't matter, right? The person at 1-to-1 made money, that's great. The person at 2-to-1 made the most money because they took advantage of it before prices reversed, and the person at 3-to-1 did not. But there's a chance that prices continue to drop all the way down. Let's just say prices continue to drop. I'm sitting there thinking, I only got 1-to-1, while this trader that got 3-to-1 is all happy because he got 3-to-1. Now, the trader going for the 3-to-1 consistently is going to have a lower win-loss percentage versus the trader that's going for a 1-to-1 or 2-to-1. Now, that trader's got to be okay with it. If you're somebody that's really likes winning a lot and you can't stand losing, you probably shouldn't be going for 5-to-1s and 6-to-1s. Yes, it is great to have these high reward to risk, but psychologically you are going to do damage to yourself to where you don't perform well, where you lose 10 trades in a row, right? But you're asking for 8-to-1s out of the market. So you have to find that balance. And what I would recommend is sticking to a very consistent set of rules here and going for 2-to-1s. Go for 2-to-1 or go for 1-to-1. Let's just use 2-to-1 for example. All your trades, 2-to-1, right? After 20 trades that you have journaled, 30 trades, 50 trades, you can then review to see what actually makes sense. Is if I go, what would I make more money if I went for a 4-to-1 instead of 2-to-1? Maybe I would actually make more money if I changed my take profit to 1-to-1 instead of going for 2-to-1, right? This is why journaling is important because you are always creating a better edge for yourself in the market. Okay? Guy, I don't know a single profitable trader that doesn't do this. They all journal their trades. We're going to look at an example here. I got to find it. Here is an example done by Brendan. He was doing his one of his yearly reviews or 6-month reviews or something like that. And I told him this is what he needs to do is try to figure out what makes the most sense. So he was reviewing 1-to-1 versus 3-to-1 versus 5-to-1 and so on, and figuring out where does he make the most money. So if he was getting out originally, I don't know, say 2-to-1, I got to look at this to figure out what he was doing. But he makes the most money when he goes for 7-to-1 and he has a 41% win rate. Now, he's going to have a smaller win-loss percentage, but he makes more money. But can he handle that? He just lost 13 trades in a row now if he changed his trading from 2-to-1 to 7-to-1, right? And so on and so on. So you got to figure out what makes the most sense for you. What happens if a zone is scoring a higher zone, like an A plus setup versus a B setup, right? Is there a difference? Clearly, look, when he's trading a really good zone, he's at a 50% win rate. It's a very low win rate, right? It's not low, but it's not as profitable. You know what I mean? And then how does he do trading with the trend versus counter trend, right? What about pivot points versus no pivot points? What about clean arrivals versus no arrivals? This is why journaling your trades is so important as a trader, right? You have your own Discord tab or journaling sequence that you need to review to see what's best. Just be very mechanical, right? That's what I always say. Flip to a back of a science book. You look at what is it? A terminology. What is photosynthesis? I think that's the one I always use. What is an atom? What is a blood vessel? Right? Your science book. You look at the back of the science book because they all have definitions, right? And you look at blood vessel, and it tells you what a blood vessel is. I couldn't give you the real definition of what a blood vessel is, right? But it tells you what a blood vessel is, right? With a very strict set of rules of what a blood vessel is, of terminology, right? So that's what our trading needs to be for extremely new traders. So you can't be bending rules, right? That's why I say try to make your trading as mechanical as you can, as you will have less emotions in your trading, because new traders are typically very emotional. And what's important is that you are extremely consistent with your risk. The number one reason, I just made a video on this. I think I added it into my tips playlist. Yeah, the 5 mistakes that destroy your trading, right? Real examples. And I talk about the 5 problems. Um, Not having a trading plan, not journaling, risking too much per trade. How do you deal with over leverage, um, not blowing your account, risking percentage? I'll tell you this, guys. Risk 1 to 2% per trade, and you will never have that issue. The amount of people that risk 10, 50% and don't have a stop loss, it's delusional. And I give you guys real examples. Like, the amount of people that reach out to me and they say they've blown 5 accounts, they've lost, their marriage is over, they lost a relationship, is astronomical. It's absolutely insane because people are not using stop loss. You use a stop loss, you will not blow your account. The only thing that you could do is slowly bleed your account, but you are not going to blow your account. Okay? So do not risk more than 2% per trade that you ever execute. Okay? Never risk more than 2%. 1 to 2%, you won't have to worry about over leveraging yourself. You won't have to worry about make sure you use a stop loss. Always use a stop loss. Don't ever list. I hate that. Oh, they know where your stop loss is, the institutions. Get out of here, man. It's all algorithm based. Yeah, they can see where general retail traders are, don't get me wrong, and there is some manipulation, but they're not trying to target you directly. All right, they are not trying to do that. If you notice consistently that prices keep stopping you out by 2, 3 pips, what do you think you should do if you notice that you keep getting stopped out by 2 or 3 pips? What do you think you should do, guys? Move your stop loss up 2 or 3 pips. Right? There you go. You got the money right there. That's the money tip. All right? It's common sense. Right? But how do you learn this? You journal your trades, you back test. You are consistent with your trading style, right? Whether that's 1 to 1, take profit, 2 to 1, take profit, 3 to 1, take profit. How are you going to manage your stop loss? Are you going to take multiple take profits? Okay, when are you going to move your stop loss to break even? After 2 to 1, after 3 to 1? How are you going to follow it? Lower lows, lower highs? There's so many different ways, right? And so what you need to figure out is what is the best consistent way that you can execute time and time again, right? And so this is why I tell people, and I tell them what to do in the private group and how to address it and figure out what works best. And I share my knowledge with you guys about what is the best way that you should be doing based off of my experience. But once you have 30 trades, I will sit down with you one on one and I will review all your trades and we're going to figure out what is the most profitable setup. Is it set and forget? Is it confirmation? Is it a continuation? Right? How do you view the markets? What are my tips here? What do I notice in your trading? Right? This is why it's so important to actually be surrounded around a community of traders, being educated and taught by one coach, one mentorship, all trading the same system, right? You got one mentor, one community, one system, and it's just like a funnel, right? That's all it is. Instead of trying to go to YouTube, type in how to draw zones, what is supply and demand, what is Elliott wave theory, technical analysis, it's information overload. Trust me, that was my main problem is information overload. And this is why I say stop following everybody on social media. Find one person that you really like on social media and follow that person and join their community, right? You should be investing in your education. People invest $50,000, $100,000 a year on a degree that they don't even use. It's absolutely mind blowing, right? So what separates these profitable traders and non-profitable traders is honestly the profitable traders are relentless. The people that, with me, what I can tell you from the traders that make it and don't make it, people in my group, is sure, don't get me wrong. I always got to play devil's advocate, and look at the pros and cons of everything. Sure, people get busy with their lives, right? Something comes up, they got to put it off, right? Maybe it wasn't for them. But the things that the profitable traders do is they are relentless at their trading. They show up every single day and trade the market. They ask questions. They hand in their homework for me to review. They show up or watch the recordings of every single weekly coaching call, whether that's the Wednesday trade review meetings or whether that's the Sunday weekly prep meeting, right? They watch the course videos again and again and again. They read the ebook 100 times, because the more times they read, the more they pick it up. The more times you watch, the more you pick it up, right? It may take you 10 times to finally understand something, right? And then it already clicks. And then they back test. I wonder if this works better if I do a back test of this versus this. It works. And then they start doing that and it works really well. The profitable traders are relentless and they communicate with me about how they're doing, what's working, what's not working. And typically the people are quitting, not necessarily quitting, but like I explained, maybe they're busy with life. Of course, I can't say they're quitting. Maybe they're busy with life. Maybe they found something else better for them. Um, they realize how much work and effort it is, and maybe they move on to that next person that's promising them 100% gains over the course of 1 month. You are not going to consistently produce 100% returns every single month. You are not going to consistently produce 50% returns month over month. You can do it for a month or two, but you're going to blow your account. Guys, over thousands of people on YouTube, right? All my friends are subscribing to this channel. Thousands of people of social media are reaching out to me. I get thousands of people reaching out to me. And I'm here to share with you what their common mistakes are. And I'm telling you here in this conversation. This is why I'm rambling, going on these side conversations here, because it's an important concept for people to understand this. And people are just relentless. Those are the people I love working with, because they want to learn, they want to get better as a trader. And those are typically the people that become these funded trader accounts. Like I explained, we still haven't even made it through the bottom of this ebook, right? Um, these guys are producing 2K into 20K, now trading for a prop firm. Guy, simple rule change in his trading is now trading for a prop firm over 150K managed in a stock firm, right? Simple rule change that he changed. How did we figure it out? He journaled his trades and I sat down with them and I said, dude, you're profitable. Just change this one thing and you're good. Changed it and he's good, right? I got to sit down and do an interview with him because he's great. But it 100% is possible, right? It's just the people that put in the work and ask for help, show up to the calls, post the homework, right? And put in that extra effort. Those are the guys that at the end of the day will always do well. It's like doing well in high school. I could pull out a racist joke, but you know what? I'll put that racist joke aside. Who are the best people that do well in high school or elementary school? It was always the people that studied the most, right? Right? They went home, they did their homework, and they studied. Those are the people that typically do the best in school. It's the same thing in trading, guys. People that ask questions, ask for help, do the work, want to get better, tend to get the results, right? It's nothing groundbreaking. Same thing with athletes. People that are becoming the best athletes, they put in the most work. So let me see what else we got to cover. We talked about journaling your trades. Where did we leave off? We talked about that, journaling your trades, not doing. How do you refine your trade? God, it's like I wrote this whole thing, man. Holy crap. This is great stuff, guys. How are you guys enjoying this video? Can you guys give it a like right now? I really appreciate it. The fact that you guys have remained here this entire time, I hope I'm still recording. Oh, I am. My gosh. Tells me a lot about you and that you want to learn. Proper risk plus trading plan. We talked about the importance of having a trading plan and going to that tips, what your trading plan should look like, right? Why you should be trading like a casino, understanding reward to risk, interviews with funded prop firm traders. And that's all going to be in the description below. Wrapping it up on what we need to cover, right? Because we only scratched the surface about this supply and demand trading and, demo trading versus live trading. Guys, what I recommend is stop demo trading and start live trading, because demo trading is really only good for if you're trying to learn a new trading platform or if you are learning a new market, like if you're getting brand new into Forex or crypto. And this stuff works for every single market. It's the same top-down analysis, whether it's set and forget, which is in that tips playlist, and all that stuff, right? But live trading is important because those are real emotions at risk, right? You are going to feel the highs and lows of drawdowns and win streaks and losing streaks. Doesn't mean that you have to risk $100 per trade. Put in a $500 account, risk $5 per trade. $5, $10 maximum, right? You will learn a lot by losing $100 to $200 out of that $500, right? Best Forex brokers to use. I'm not going to get into that, but that's talk more about that in the training. We'll talk about that later. Training, I have that in the tips playlist. Everything's in that tips playlist. How to become a prop firm in the tips playlist. What separates the profitable traders from non-profitable? We talked about that and so much more, right? Like I said, I've been doing this for over 8 years. It's a proven strategy. This is why people are going through the Moneyball trading coaching program are getting results. And we just talked about that. I don't think I need to cover that again, right? And so trying to think what else we got to cover about this trading methodology. We kind of really did, and anything else that if it really inspires you guys to learn more about this, check out that tips playlist where you can learn more about it. Subscribe to the channel, and that whole moneyballtrading.com. It's a free training that you guys can go to where you will learn more about your top 3 tips on how to become a profitable trader. Why 99% of the traders are losing money. I know a lot of people want to become prop firm traders, right? And as well as with everything, this ebook that you guys have saw this whole thing is going to be for you as well. I'm going to be adding to it. So within a week time, if you're looking at this a week later, 2 weeks later, it's going to be updated for you guys. I will also give you that ebook as well as videos, more action, an action plan for you on how to actually make a first or second stream of income and more about best brokers to use, right? Live trading and so much more. And so I really recommend if you guys really did enjoy this, like I really appreciate if you guys do that master class. Check out what I have to offer with the Moneyball Trading Coaching Program. It's nothing but value. I try to share with you guys about how this is possible and what my best tips are about how to actually go about this. And if you guys have any questions, like seriously, put them down below. You can reach out to me on social media at Moneyball Austin, Facebook, Twitter, Instagram, social media, TikTok. Um, and I really just want to say thank you guys so much for watching this long video about supply and demand. And maybe it's a video that we produce once every 6 months or something like that. But everything else should be in those tips videos. Subscribe to the channel, go through that training right now. And so you can learn more about the system, about how you can become a profitable J trader and accomplish your goals, whatever you want. All right. We're going to end it here. Going to have a sip of my Modelo if you guys are having a beer or whatever you guys are doing. Okay. It's the holiday season for right now where I'm making this video. So Merry Christmas, Happy New Year. If it's not and it's the middle of summer, that's awesome. Maybe it's Happy Halloween. I don't know. Hey, enjoy the rest of your day. Thank you guys so much. I will see you guys in the next one. Cheers. Bye bye. Oh, that was awesome. That's so much fun.